Hey traders, Raghee here. We're going to talk about price movement ranges. So first off, what are price movement ranges? They are volatility-driven support and resistance based on up to 6 months of price movement range. There's two kinds. One is the hourly price movement range, or the HPMR, and the other is the daily price movement range, or the DPMR. So let's talk about what the difference is. On the left side, you'll see the red and the green zones of the hourly price movement range. This means that every hour, in this case on the S&P, we're looking at the typical price movement for this particular symbol. So every hour, the volatility is going to adjust slightly. In fact, that's something most traders don't know. Not every hour of the day is created equal. So the hourly price movement ranges looks at the difference between 8 to 9 a.m., 9 to 10 a.m., 10 to 11 a.m., and so forth. That's the HPMR. The daily price movement ranges you'll see on the right side. These are the yellow or gold and gray zones on the chart. Now the difference between them is, while we look at hourly ranges with the red and green, the gold and gray show the daily ranges. In other words, what typically happens throughout one session. So what happens on Monday versus Tuesday versus Wednesday. Each daily session does have its own volatility characteristics. So we separate that and once again look at up to 6 months of these types of moves, this time based on a single session. These I will use for swing trading. Now, what do they tell me? In a word, they're support and resistance. Now, most people look at support and resistance based on price or price action. This isn't price alone. This is time, whether it's the hour of the day or it's the day of the week, and it's how many points a particular symbol can move given that period of time. In other words, these are levels that most people don't even see exist, because I'm able to look at 6 months of behavior and they're plotting the support and resistance of the typical characteristics of that symbol on the chart. That's what they tell me. Here's why they matter. Imagine not knowing that the S&P is capable of a certain number of points every day, and the word volatility comes up. How do you know if something's more volatile or less volatile on any given day? How do you know if you're dealing with a low volatility type day or a high volatility type day? How do we know if price action is reaching a resistance level or if it's reaching a support level? And this is what the hourly price movement ranges give us. This data that says, hey, if we go up into this red zone, that's likely where price is going to exhaust. If we go down into the green zone, that's likely where price is going to exhaust, because the typical number of price points or dollars have been exhausted. You can see that on each chart. So they matter just because support and resistance matter, right? But we're able to derive this in a very unique way using time and volatility. So here's how they help with entries and exits. Well, we all want to buy from volatility, or we want to take profit in resistance. Maybe you want to short from resistance and take profit in support. Finding where support and resistance are is an edge. Add to that, seeing levels that most traders are unaware of is another edge. So the way that I would use this to help with entries and exits is, for example, if I see candles trading down into the support of the daily price movement range, that would be a zone from which I would buy. If I see price movement trading up into the resistance of, for example, the hourly price movement range, that could be a place to perhaps take profit after having already bought from the green zone. So you see, it's almost like ping pong. They go from one end to the other with a 68% probability that under normal circumstances, 2/3 of the time, price action will be contained by these zones. So a really great question comes up. Okay, Rod, I get the gist of what this is. Can't I just do this myself? Well, sure. If you want to go back and look at up to 6 months of data, and you want to look at every single hour of the day, 24 hours, well, 23 for the futures, right? 6.5 for stocks. Take a look at the price movement range for every hour of the day, going back 6 months, and then run it through a process to get the data and then print it on your screen? Of course, it's a lot of data is what I'm trying to say. Is it an algorithm? Yes. And algorithms do what? They take so much data that one human couldn't possibly keep up with. It processes the data, and then it conveniently posts those zones on a chart. So the reason I say, can you just do it yourself? Well, if you had all day to calculate a single symbol, but by then the trade's already happened. The day's already gone by. It's just too much. In fact, these are processing literally thousands of data points. So then what about how many symbols we can do this on? Can I use them on any symbol? Well, like any algorithm, we need the data. We feed it to the formula, and then it will then print out the result. So what I do is I look at approximately 100 of the most liquid open interest stocks and ETFs that have good option, volatility and volume and open interest, and then we plot those. So most of the most popularly traded symbols are available with hourly price movement ranges and daily price movement ranges. Not all of them, but approximately 100 for each. So pretty much anything that you'd be looking for that has good motion, has good movement, has good liquidity, you're going to find the hourly and daily price movement ranges on. What symbols can I get this information for? So I'll give you an example. All the Mag 7s, major commodities like gold, S&P, Dow, Russell, crude oil, silver, most of your high concentration weighted Dow stocks, S&P stocks. You can look at semiconductors, communications, tech stocks, financial stocks, metals and mining, gold miners. So again, most of the symbols that we're going to be looking for will be covered by the price movement ranges, hourly and daily. Now, is there a subscription? Yes. Why is there a subscription? Well, every single month, about every 21 to 28 days, we're going to look back at the volatility of that symbol. So let me make this super clear. The algorithm itself doesn't change. This has been the same algorithm that I've been using for over a decade. But the data, the open, high, low, close, is required to be fed into that formula to get the new zones. So just like if I were looking at January of 2025 information versus January of 2026, there were different price movement ranges. In fact, some of these symbols were trading at completely different prices. Some of these symbols have split. So there's going to be information that needs to be put through the algorithm. And because these need to be updated, there is indeed a subscription. So you have the most recent, current, up-to-date, accurate levels each and every month. Where can you get the daily and hourly price movement ranges? You can get them right here at simplertrading.com. There is a subscription for the hourly price movement ranges for those of you that like to day trade. There is a subscription for the daily price movement ranges for those of you that prefer to swing trade. And of course, if you like to do both, you could sign up for both the hourly and the daily price movement ranges. So do you need both? It depends on what kind of trader you are. Myself, I like to day trade and I like to swing trade. So for me, both are extremely valuable. But again, it depends on what kind of trading you like to do. And then you can, of course, look for the data that serves that purpose. Most of our traders love having both because what we like to do is focus on day trading and swing trading. So again, you have that choice.